Hello and welcome back to this edition of Daily Actives brought to you by Bootleg Macro. I am Dustin. We're going to be looking at the most active stocks in Yahoo Finance today. I just made a video on Lucid. I kind of went off, not going to lie. I'm going to try to keep it a little bit high and tight here. We're going to be focused on NVIDIA, MARA, NIO. I don't even know what Warner Brothers Discovery necessarily is. HIMS, we're going to look at a little bit of American Airlines, probably some QUBTs. Maybe we'll make it to Ford. Tesla, I'm still in Navy. Let's go ahead and look at NVIDIA real quick. The thing that I like about this, so if you haven't seen this, this is an app that I have built. You can very easily use this exact same app. I'm going to go ahead and just update this. If you come in, this is free to use. You get 10 individual searches per day. I give myself 99 because I built it so I can do what I want. But if you want to go ahead and upgrade, feel free. But look at NVIDIA. What I like about what I'm seeing here, I covered NVIDIA yesterday in a nice video, and I covered a lot of the other semiconductor stocks like AMD. I also covered TSMC or TSM or whatever, Avago. I love that these things are just, they went to the middle of the range yesterday, and that was exactly what I highlighted. I highlighted yesterday that when I looked at the data for NVIDIA, it had had a nice pullback in the middle of its range at 167.03. And you know that because it has a green background with black lettering, that means it's in the middle of the standard deviation range. And now we are, I think, two standard deviations above its mean. It is still very bullish. We are seeing a higher low, which I love to see. We are almost going to start seeing a higher high, but we do got to break that like 186, 180.86. I love that we're starting to see a little bit of resumption of the bullish move inside of NVIDIA. Things are looking fantastic. Okay. If we're going to be honest, I would have really wanted to buy yesterday if I was paying attention. I just don't own any NVIDIA. Well, I definitely own NVIDIA through some like Qs or some of my ETFs and things like that, probably my retirement fund. But if I'm looking at what we've got going on here, NVIDIA is nothing but an absolute bullish stunner. Like this is a 10 out of 10, boys. The reason I say that is because this is like a girl walking into the bar, coming directly up to you and buying you a drink. Okay. All it does is get better and better. Like for real. If we look at when this thing went bullish, look at this. When it went double bullish. So I need to see when you get bullish double. Like for me, this bearish is not an override of this bullishness because it wasn't too bearish in a row. But this right here, 116.65 on May 9th. Now, I mean, if you bought it at 116, you'd be at one. I mean, goodness gracious, great balls of fire. You are up X amount. I mean, in 3 months, you're up 53%. That is a wild move for something that's nearly $4 trillion, if not more. Okay, so I am very impressed. I'm very, very impressed with what I'm seeing in NVIDIA. Let's go ahead and see what else we got here too. We got MARA. Now, MARA is one of those stocks that I know is pretty much related to Bitcoin. I don't know exactly what they do. I think they might mine it. I think they might sell it. I think they might just hold it. I'm not sure. Maybe they're a treasury. Who friggin' knows anymore, boys? But when I look at what we've got in MARA, MARA is an absolute trendless behemoth. Okay, like where have we gone? I'm serious. Like over 6 months, we're down 4.51%. Over 1 year, we're down 18.85%. Come on. I mean, yeah, we're up 22% in 3 months. We're up nearly up 20% in 1 month. We're up nearly 12% in 15 days. But like, if we're gonna be honest, we're not going anywhere. But the thing that I do like, I mean, the thing that I absolutely love about what I'm seeing tomorrow is we saw massive volume today. It was down. I'm not sure if that's good, but we're in the middle of the range. We're in the middle of the range. We are still bullish. I'd like to see a higher high. We've obviously come down a little bit. I'd like to see a higher low. We've obviously come up a little bit. The only concern I'd see now is that we are below the trade level. 1781 is the price I'd need to clear. I'd probably set an order at 1781 to be able to like buy at that point, but I bet you this is one of those things that likes to gap a lot. So I don't think you're going to get it. But if we're going to look like just over the past 3 months, these moves, I mean, you're at 1443. Now you're up at like 1980. I mean, it doesn't seem like a big move, but percentage wise, that's a nice move. I mean, that's like, I don't know, it's not a 30% move, but you're getting up there, right? Like, over 3 months, you're up at 22.87% over 3 months. That's a nice move. I mean, I do hate a little bit on Mara. I've had some conversations with some friends who like inherited some money. We're like, I'm just gonna throw it all in Mara. And I was like, buddy, I was like, there's so many different things that you could do instead of just sitting this trendless wonder. I mean, I'm not saying that this isn't like a nice look, but like really, you got spikes, but you're not trending. That's the only concern that I have in Mara. The nice thing is that if we can get the top of the range, to kind of go higher, that would be a good signal. We are in the middle of the range. Got to stay positive about that. But Mara is something that is probably going to take a lot more attention than it is necessarily going to give gains. Let's go ahead and look at NIO real quick. I did this in the previous video that I already did when I covered Lucid. So if you want to see any more about that, you can cover it. NIO just needs to come back in the middle of the range. Every single thing that I'm going to say is that it needs to come to the back in the middle of the range. This thing is two standard deviations above its mean. We do have a higher high. We were down nearly 2% today. I like what I'm seeing, but I do want to see it again with that green background and the black lettering. That is going to be a significant way for me to feel much more comfortable in what I'm seeing here in NIO. Let's go ahead and look at Warner Brothers Digital. What is Warner Brothers do? Warner Brothers Discovery. This is the one I think we've been hearing. Is this how Stephen Colbert got fired? Was Warner Brothers? Ooh, that's a nice trend. See, we were talking about how Mara wasn't trending. Now this is trending, right? Like this is trending because you can even look on a 1 year, you're at 50%. On 6 months, you're up 27%. 3 months, you're up 54%. I mean, like, what the question that I would honestly have if you came in here and you were paying attention to Mara, why would you own Mara and you wouldn't own Warner Brothers Digital or Discovery or whatever this is? The top of the range is screaming higher, right? We've got higher highs. The bottom of the range is, kind of doing whatever, starting to make its way up, and the price is just careening at the top of the range. That is a beauty. That is the type of move that will get you paid and you won't have to do anything. That is put your money in the stock and go to the beach kind of trend. Okay. Especially when we're not that far off of the trade level, which is at 1183. The top of the range is at 1390, 1369, boys. That one's for you. I mean, the thing that I'd love to see again is I want to see it with the black lettering with the green background. I want to see in the middle of the range. I would have wanted to buy it on 77 or 701. What is this? Let's see when we had that. Yeah, 77 right there or 701. Yeah, right there. I mean, those are the two good days to buy it. I mean, there's not really a bad day in something like this, but on those 2 days, you'd have been up nearly 30% in that 1 month time. I mean, that's not even a full month ago, right? It's 15 days ago, roughly. It would have been up 20% in 15 days. Who's not going to take that? I mean, I like what I'm seeing in Warner Brothers Discovery. I think that looks really nice. I'm personally a believer in it. Let's go ahead and look at HIMS. What do we got in HIMS here? The thing about HIMS is that this thing has been a vol machine. Like the type of volatility that people have felt. Like, look at this. Look at that HIMS chart. Like, look at this. You were up at what, 70 something? And then you were down at like 30 something. You're in the, oh my God, you went to 25. That will ruin a summer. Oh my goodness, what was today? Well, see, and the thing was, it gave you so much opportunity. Look at all that green with the black background. Look at all that green with the black background. I mean, yeah, you had to you had to ride it down to $41. And as I mentioned, you were down at 25 bucks here in the middle of April. That was rough after you were up at like, were you at 70 recently? I don't know. But that was a little rough. I mean, I won't be lying. That was a rough move. 68.74, it looks like in February and then all the way down to 25 in the middle of April. Then we're all the way back up to 64 in the middle of May. Came down to 41 and then at the end of June. Looks like we're running again. I mean, I like what I see. You do have to be comfortable being uncomfortable inside of HIMS, but I think that's literally the whole point about those eating pills and the freaking whatever you're injecting in your stomach to like lose weight, Ozempic, and helping with the male pattern baldness and all that kind of stuff. Like HIMS is for the boys, but you have to be honest that you need to be open to the kind of volatility because today it was up 16% on 81 million shares traded. I don't know what the news was. I don't know what is going on. I don't know if it's earnings. I don't know if it's catalyst. I don't know if they acquired something. I don't know if they're being acquired. I really don't care. All I can say is that this is something that is definitely going into my portfolio because I want to pay attention to what's going on. And I'm going to show you. So now that I've added my portfolio, because again, this is the free version. If you want to do this, you'll get 10 versions of being able to look at a stock every single day. Come on in. Data gets updated at 5 p.m. on East Coast time. And then, it just goes down to the bottom of what do we see here. But what I like is that this is the only problem with HIMS. This is what I'll be honest about. HIMS is too far away from its trade level, right? It is 17.5% away from this. It is literally above the top of its trade range. That is not good. Like, it's great, but it's just not the time to buy. If I was looking for something to buy in here, I might buy Aust. Oust actually looks pretty nice because it's slightly above its trade level. Yeah, you're only 5%. You are 16% below the top of your range. Let's look at Oust real quick. Not saying that I'm interested in doing this. I just noticed this because I was on my portfolio. Oust is looking nice. Yeah, this is actually the time to buy Oust. I don't even know what they do. All I know is that they are bullish. They've got a higher low, higher high. They're in the middle of the range because I can tell there. And we have been on we've been running. We have been running. This thing is up in 15 days. It's up 23%. In 6 months, of 100. Look at that. 233% in 3 months. I don't know what this thing does, but that is a nice looking stock. Let's see what else we got in here. I don't really care about American Airlines, but QUBTs. Actually, let's look at American Airlines. What does it matter? It doesn't cost me anything to look at stuff. Let's take a quick look at American Airlines, see what they got going on. Now, it could be nothing, right? And that's the thing about these kinds of airlines. The airlines, they drive a lot of volume, right? Because they're big companies and these are institutionally owned. They are big, like 75 million shares traded today to what? Do 1.45%? Yuck. I mean, granted, you are up 30% in 3 months. You're up nearly 12% in 1 month, nearly 10% in 15 days. But I mean, why? Like, if you're seeing some of the stocks that we're looking at, the actual volatility that you're getting, that's where the fun is. That's where the real trend is going to be. That's the put the money in the stock and go to the beach kind of stuff. American Airlines is just going to make it tough on you. You're just going to be grinding out returns, which I mean, if that's what you want to do, this is just not the market where I would be doing that personally. The reason why I wouldn't be doing it is because, and I don't even know what I looked at here, but the reason why I wouldn't be doing it in this market is because this is a market that is completely built for swing trading, day trading. You're going to see some massive froth coming into this. I mean, look at this. Look at the qubits. This thing, I mean, an absolute stunner. And yesterday, again, green background, black lettering. That was a day to buy when it was down 4.3%. That was how I would have wanted to buy it. I didn't pay attention to it because I wasn't paying attention. If we look though, okay, so this is up 15% today. Over 1 month, it's up 35%. I mean, goodness gracious, it's up 267% in 6 months. 1,000. What is this? Bitcoin? Like, what is this? Okay, that's going in my portfolio too. I do not know what these things are, but I will start paying attention to them because that's the type of move that I want to see. I've already covered Tesla, absolute trash. Let's look at Riot. I've not seen Riot in a while. Let's go ahead and see what we got on Riot because I think anything related to Bitcoin right now is going to be hot. That's the thing. Anything related to Bitcoin is going to be hot. And this, see, this is the difference between American Airlines. I'm not saying that this is necessarily a great looking stock, but this is the type of trending you're looking for, right? You're looking for something that is up 14% in 5 days, something that is up 43% in 1 month, 84% in 3 months. I mean, granted, it's only up 27% in 6 months and only 23% 1 year, but this is the beginning of the run. This is the generational. We're hitting 30, 40, $50 and something like this because this is where things get real frothy. And you want to be long blow off tops. You don't want to ride them down. You don't want to catch falling knives, but you do want to be long fall like blow off tops. I mean, that's why I only buy bullish trends, and I'm looking for things at a higher low in the range and a higher high. And when I look at what I'm seeing here in the data, we are still well below the 1530. I would like to see it again with the close with the green background with the black lettering. That means it's in the middle of the standard deviation range, right? Like that is going to be what we saw here, right, on the 15th when it was at $12.10 or whatever. That was a good buy. Not something that I was doing, but it's something that I'm going to be paying attention to. I'll add it to my portfolio. I'll check it every single night. I'll see what's going on. See, we got in Rocket. I don't even know what's going on in Rocket. These kinds of things. So like RKT, no idea what this is. I have no idea what this is. I don't like. I'm saying the name Rocket. I don't even know. See, and look at this is also nothing. I mean, you've got some massive action in this in terms of like volume. Like you've got some massive turnover, but why? Like this, you might as well be American Airlines or HIMS, but like not as good because you're again, if we look on the 1 year, you're up 7%. On 6 months, yeah, you're up 30%, but on 15 days, you're up 11.9%. I don't know. So you could choose to track something like that if you want to. That's not gonna be something I'm gonna pay attention to. Valet, I don't care. Wolf, what is Wolf? What is WLF? See, these kinds of stocks, like the thing about the market that's happening now is that the market's completely transformed from where they used to just name the stock ticker after the company. Now they're like, ooh, we gotta make sure it's a good ticker for Wall Street bets. Like Wolf, okay. I mean, I'm down. This is an interesting one. You've had some highs, you've had some lows, and you're starting to see a little bit of trending higher. But again, you're still down in the 1 year, 5.8%. Yeah, we're starting to see a real reversal here. If you want to get long, in my opinion, this is exactly where I would because you're again green lettering or green background, black lettering, middle of the range, very bullish, high volume, higher low. We don't have a higher high, but that's completely okay. I would feel very comfortable buying Wolf, in my opinion. I'm gonna put it into my portfolio just to track it. AT&T, I saw you had some problems. I don't know if you had a problem or something. You were on like Bloomberg or CSNBC or whatever that channel is, where they were talking about you. I mean, I use AT&T. You know what I mean? But like, stock looks like trash. I mean, it's had a good run. I'll say that. Like, it's up 52% over 1 year, and it's got a decent dividend. But now we're bearish. Like now that we're bearish, I don't want anything to do with this stock. Like you saw a massive, essentially this had to be like the dumping. Like this had to be, yeah, we were up 1.2% or like 3% over 5 days. This has to be the dumping because we've seen a very nice return in something like AT&T over the past 6 months and 1 year, but we flip bearish. We're seeing lower lows. We're below the trade level. I don't like it. That's not something that I'm going to be paying attention to. It's not something in this market I'm going to track. It's not something that I really personally care for. Let's look at Stellantis. These tickers, you just keep going further and further down the most actives, and very quickly you get to a place where you go, "What is this? Like, what is this? What do they do? Why does anyone care?" And yuck. Like, this is a yuck. I don't care what anybody says. They could be curing cancer. They're stocks. Okay, I'm serious because like you're down 22% over 6 months. You're down 48% 1 year. If you want to buy stuff like this, I'll take it to buy. Just buy UNH. This is a crap stock too. This thing is down like nearly 50%. Yeah, look at this thing. It's down 47% over the 1 year, 46% over 6 months, 30%. I mean, you're starting to see a little bit of a rebound, I guess, but you're still bearish. You still got trade levels above you. You still got a lower low. Like we're in the place where if you're going to do anything with this stock, so my friends are asking me about it, this is when you short it. Like, what about UNH tells you, ooh, I got to own it. I need to put my money into that. There's no point. This thing was at 291 like 5 or 10 days ago, and it's essentially at 292, and that's considered to be up. This thing was at 282 3 or 4 days ago. Like there's no point to buy bearish like moves. Absolutely no point. Not in this market. Not when you're looking at. So if we just look at like macro real quick on this, and then you can get this if you're free on the Trade Range app. If you are looking at the macro, SPY is bullish, Qs are bullish, Dow is bullish, small cap growth, small cap value, equal weight, emerging market ex China, China is like bullish. Friggin' the only thing that's really bearish, like long-term bonds, not bullish. Okay. You want to buy oil is bearish, gold is bearish. I don't even think gold is really bearish. I think gold is going to have to actually flip to being positive in a moment here, just because we're starting to see, actually, no, it's still going sideways to nowhere. I mean, yeah, it's up 40% for the year, but there's nothing really super positive here. You're starting to see a little bit of a breakout in terms of the moves that we're seeing. So it probably could flip bullish sometime soon. But if I'm going to be honest about what I'm seeing inside of the macro environment, I don't understand why anybody would be buying any bearish trends. It is confusing to me why people are like, oh, I got to buy this crappy penny stock. Why? Just buy NVIDIA. Like right now, if I look at what I have in terms of things that are in the middle of the range, Meta's in the middle of the range, Microsoft is in the middle of the range, and then both bullish with higher lows on Microsoft and higher lows on Meta. They're both bullish. Like I would honestly buy Salesforce, and that company sucks. Like the company doesn't suck, the stock sucks. Okay, the stock is terrible when you look at the performance that it's had. If we go into Salesforce, it's bullish. Okay, it's bullish. It doesn't even have a higher low. This thing is over the past 6 months is down 24% in a market where everything is up. Like the S&P is up. It's barely above its trade level. It doesn't have a higher high, doesn't have a higher low, doesn't have anything positive. So if I just start to look at what I'm seeing, I am very confused why anybody wouldn't be going onto the most active stocks, picking up the things that are the most bullish. Ooh, I want to look at SoFi. SoFi is a fun one. SoFi is got the boys buzzing because but again, look at the move. Like look at the SoFi move. This is 9 months. Like this thing, you could have bought it. You could have bought it here, right? Right when it's flipping to be from bearish. You could have bought it here when it flipped to bullish on the 20th of April at $13.20. Right? This thing is up 69% in 3 months. This is the type of move. Ooh, I love this. I might actually buy SoFi because it's in the middle of the range, green background and black lettering. You can see it's bullish. It's got lower highs. It's got volume that is decreasing as the price is kind of like falling and like stabilizing. Very good sign. And it's up 190% a year. I'm definitely adding that to my portfolio. I'm definitely adding SoFi. I'm just very confused about why, if anybody is thinking about like, oh, I should be buying this, tell me, like, why are you buying AT&T? Tell me why do you think you're buying American Airlines? Explain to me in the comments below, like, why are you making these choices? If you could be like, look at Palantir. Like, let's just quickly look at Palantir. Since we're here, since we just can continue just to look at whatever we want, let's look at Palantir. Palantir is running, and it looks like, yeah, yesterday, middle of the range, green background, black lettering. It was up 3.7% today because it's bullish. It's got higher highs. It's up 438% over the year. It's up 93% in 6 months, 37% in 3 months. Like these are the kinds of stocks that I'd be paying attention to, that I'd be buying. I just, for the life of me, can't figure out who's like, I gotta own AT&T. Do you? Do you? Do you need to? Do you need to own American Airlines? Like, there is no reason why I could see that you would feel comfortable needing to own something like that. And if I look like, so Owlet, and here's what I'll show you. So Owlet on here, we'll go here. So this is my premium version. So if you end up buying the premium version, you get a couple more tabs. Like on this current one, you can't get today's trades or economic forecasts or currencies. If I go to today's trades, what it'll do is it scans against what we saw. This is from yesterday because today is the 20. Oh no, yeah, because this is the 23rd and this is from yesterday. Owlet was the number one suggested trade on this yesterday. Owlet was the number one. We had Lemonade, NVDY, Peloton, CRM, and Meta, and then KSA, which is Saudi Arabia. But the number one was Owlet. What does Owlet look like? Owlet looks incredible, right? Let's go look at this thing. Look at that. Like this is the number one trade suggested yesterday. This thing was up 5.16%. The reason why that I love this thing is because what it does, it just goes through the market, it scans what's available, and it says, okay, what has the best setup? And it isn't about like what does it do? What is its catalyst? Anything. It's where is it in its close relative to its upside? 16.46% from its upside. I mean, that is the type of move that I'm personally looking for, and that's what I'd rather do. You don't see American Airlines in here. You don't see AT&T on here. You don't see these crappy stocks that are just kind of floating around. You want to find things You want to find things that are looking like they're going to provide you an opportunity. So, in my opinion, this is exactly what I would do. Tell me what you think in the comments below. Are you long? Are you short? Do you like it? Do you love it? Is this even a good review? And before you go, come check out TradeRangeAuthentication.web app. I got to change the URL because I think that's what I've been developing on. But we got to figure out like there's better tools out there than what you're using right now. And I think this is a much better tool. But I'll talk to you soon. Have a great day.